Telstra rewards its shareholders with a bigger dividend, even though profits are lower. The Aussie dollar surges to a 2-month high, and workers stop returning to the office. It's Friday, the 12th of August, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Adam Lang, and good morning, Sean Aylmer.
Good morning, Adam. Look, we're in the middle of reporting season, and I've been thinking about you. You used to run an ASX-listed company. You were CEO. What was reporting season like?
Oh, tense, actually, because there were so many moving parts as you're bringing the results to a conclusion, the announcements in the way that you want to communicate them, and you want to make sure you get it right. So pretty high pressure, but in the end, when you did it well, you felt like you'd been challenged and done okay.
Yeah, it must be such an intense few weeks there just trying to pull everything together because there's so much information, trying to explain a company in really a few pages.
Yeah, and you know what? I never got used to it. As many times as I had to do it, I always felt the pressure, and I think that's probably a good thing.
Yeah, probably is as a CEO, because you want your CEO to really feel it.
Yes, you do. Now, immediately after the show, stay listening for Sean's chat with Adam Schwab from Luxury Escapes. Now, Adam is a great communicator, and who doesn't want to talk about luxury escapes?
And he tells us where to go too, even better.
Okay.
In the
nicest possible way.
That's right.
All right, the main story this morning, Telstra, the company with more shareholders than any other in the country, has lifted its dividend after announcing a fall in net profit.
Yes, the dividend was the good news, but there was also some bad news with revenue and earnings falling. For the last financial year, Telstra made $1.8 billion, down nearly 5%. Underlying earnings, which takes out one-off items, were up 8%. Telstra's share price yesterday fell 1.4% after the results came out. Chief Executive Andy Penn, who has less than 4 weeks in the job before retiring, said the mobile business was outstanding. Telstra is also being helped, Adam, by people travelling overseas again, and their mobile roaming revenue is up, which I was kind of interesting. The consumer and small business fixed operation was solid. That business, though, is being hampered by continued NBN costs. Also, the decision to set up infrastructure assets as a standalone operation is starting to reap benefits. Now, the increase in dividend from 8 cents a share to 8.5 cents a share is the first rise in 7 years. And given Telstra has more than 1 million shareholders, there'll be some pretty happy investors around the place today.
It's not a bad way for him to go out. And that was Andy Penn's last result. So, Sean, we spoke about the pressure on CEOs before. Do you think he's been a successful CEO at Telstra?
Well, I suppose it's a very subjective judgment, but if you go by the share price since he instituted major cost-cutting and reform back in 2018, probably. Telstra has outperformed the broader market, notwithstanding the introduction of the NBN in the sector, which of course forced massive change on the business model of Telstra. Under Mr. Penn, the number of Telstra Plus members has grown to 4.5 million. 3/4 of interactions with consumer and small business customers are now digital, and costs have fallen by about $2.7 billion. Mr. Penn cut staff, simplified the business and made it much more digital. No small task at a group as big and with the history of Telstra. The current CFO, Vicky Brady, takes a top job next month. Good luck, Vicky.
Good luck indeed. Now, Sean, Telstra's a big story, but it's not the only one on the ASX. What about the rest of the local market?
Well, the S&P ASX 200 closed up 1.1% to 7,071 points yesterday on the back of a strong lead-in from Wall Street. Consumer discretionary companies, real estate investment trusts and material stocks led the way. ANZ was the best of the banks, up 1.7%. BHP was 2% higher, as was Wesfarmers. Industrial property group Goodman and James Hardie both jumped nearly 4%. On the other side of the ledger, Rio Tinto fell 4%. A few results around, as you could imagine. Property group Mirvac share price rose 4% after announcing a 5% hike in net profit. Lithium producer Lake Resources, its share price was up 19% yesterday. Now that means it's up 150% in less than a month. Crazy.
That is incredible.
It is. That stock has gone berserk. Adore Beauty Group's share price jumped initially yesterday, then it fell, so it was 5% below where it started. That's after Chief Executive Tennealle O'Shannessy said she'll step down early next year. She's moving to ASX-listed IDP Education. The market then got over that news, and by the end of the day, Adore Beauty's share price was up 5%. Another kind of rollercoaster ride for that one. Best on the day was Life 360, up 13%. Worst was Computershare. It was down nearly 5%. And just finally, Adam, a new survey by the Australian Securities Investments Commission shows that 44% of mum and dad investors hold cryptocurrencies. It's the second most commonly held asset behind equities. Now, a quarter of the survey's respondents said crypto was the only investment they had. More than half of new investors are aged between 18 and 34, and this is one that stunned me. 41% of that age group are looking to social media and finfluencers to find out about investing.
That is staggering.
It's scary.
Yeah, you're right. And look, please, if you're a listener to this show, in fact, even if you're not, please get professional financial advice. They're the only ones that can really assess your situation.
Exactly. Well said.
Now, Sean, what about overseas markets? What's happening there?
Well, the big news came from the July consumer price data in the US, with headline inflation falling to 8.5% for the year, down from 9.1% in June. Still really big numbers, but much better. On a month-on-month basis, in fact, inflation didn't rise at all during July. This was well and truly below what market economists were predicting, and immediately investors priced in a lesser chance of the US Federal Reserve lifting interest rates by 75 basis points. What's all that mean in English? Good question. Inflation, which was at a 41-year high, came in lower, raising hopes that the worst might be over for price rises. And that means interest rates might not have to jump by quite as much. Having said all that, members of the Fed over the past 24 hours were out and about talking up the need to tame inflation, saying the fight isn't over. The upshot of all this, Wall Street jumped, with the major bourses doing very well yesterday. Some of the heat came out of the US dollar, and as a result, the Aussie dollar jumped past 71 US cents. Now, that's the first time that's happened in 2 months. Go ahead, the Aussie dollar, particularly because I'm travelling later in the year. Finally, in commodity markets, Adam, Brent crude is trading around 97 US dollars a barrel, and gold is at 1,780 US dollars an ounce.
Sean, it just feels like it's not just a spectator sport, it's an active sport. Every piece of news seems to have an impact.
Yeah, certainly when markets are so volatile as they have been for a few months now, investors jump on anything, good or bad, and start trading on it. It's kind of crazy.
It's amazing, and it looks like we're seeing that happen. We'll be back in a moment with the rest of the day's business news. In the world of economics, inflation expectations are central to what's going to happen to interest rates. And the good news is that expectations have tempered a touch.
That's right. According to the Melbourne Institute, consumer inflation expectations fell to 5.9% in August from 6.3% in July. Now, one number is hardly a trend, but it is hopeful. The Reserve Bank is keen to cap not just inflation via higher interest rates, but also inflation expectations. If people think prices are going to rise, they're more likely to ask for bigger wage hikes or be prepared to pay more for goods and services. Price rises then become self-fulfilling. It's a real problem for the economy. So any indicator that suggests expectations are being tempered is certainly good news.
Sean, it looks like it's becoming official. The Omicron outbreak has stifled the return to office trend, and that is especially the case in Melbourne.
That's right. Property Council of Australia figures show that Melbourne had the lowest return to office rate in July, with occupancy at 38%, down from nearly 50% a month earlier. Now, of course, Melbourne was hit hardest by restrictions and lockdowns previously in the past couple of years, so I suppose it's not that much of a surprise. But really, less than 2 in 5 people are returning to work. Sydney went from 55% to 52%. Brisbane and Adelaide also had big drops, though their occupancy rates are a bit higher. Only in Canberra and Perth did more people end up in the office. And Adam, there are still plenty of COVID cases being reported. Across the country, there were 25,000 reported infections yesterday and 86 deaths. It's still way, way too many.
And Sean, perhaps a little bit differently than the last couple of years, we might expect that some people are getting COVID and not reporting it or not even testing.
That's right. The New South Wales Health Minister has estimated that only about half the people that actually have COVID report it.
Wow. Okay, moving on. State education ministers are due to meet today, and high on the agenda is how to get more people into the profession.
According to a federal government discussion paper, the demand for high school teachers will outstrip graduates by more than 4,000 over the next 3 years. In New South Wales, the government is considering creating new teacher jobs with salaries up to $130,000 a year in an effort to attract people into the sector, according to the Sydney Morning Herald. Salaries at that state start at under $74,000. They hit a maximum of $117,000 if a teacher is considered highly accomplished. Now, many teachers leave the classroom to take up management roles, such as principal or deputy principal, simply because it pays more, and we're losing these great teachers. It is undoubtedly a crisis. Hopefully, the state education ministers today come up with some sort of solution, or at least some sort of strategy.
Well, Sean, you and I have both got children in school, and I'm sure many listeners do too. So this is a critical interest to all of us.
Absolutely. And teachers are great. Teachers do an amazing job.
Yeah. And I think particularly over the last couple of years, we've been reinforced just how important it is.
Yeah, I agree.
Now, moving on, Sean, the country's biggest insurer, QBE, was hit hard by investment markets in the first half of this year, but it says its underlying business is going pretty well.
Well, that's right. I mean, net profit was down 66%, even though revenue was up 26%. We mentioned this earlier in the week. Insurers take premiums, invest money, and then they pay out on claims later. When markets are volatile and fall, so too do earnings. Now, investors, they look beyond that because inevitably markets come back, and they liked what they saw in QBE's result yesterday. Its share price jumped 3.3%. They like the fact that premium revenue is likely to jump 10% in 2022. That's a pretty big rise. Suncorp said the same thing earlier in the week. And just as an aside, I always forget how big a company QBE. It's such a global company. And when it came out yesterday, it said that it had put aside $75 million for potential losses from Russia's invasion of Ukraine because it provides political risk cover in Europe. I don't even know there was such a thing.
Wow, that is fascinating.
I agree.
Now, Sean, one of the most iconic brands in Australian corporate history is AMP, and the rebuild at AMP continues. And yesterday, the bank and wealth manager reported a 25% drop in the half-year normalised profit, but will give $1.1 billion back to shareholders.
AMP's bottom line was actually a net profit of $481 million, which was a big jump from this time last year, but the bulk of that was due to the sale of the company's infrastructure debt platform. Take that out and you end up with a lower profit, that 25% number. The group has commenced a $350 million on-market share buyback. It'll give another $750 million to investors over this financial year. The company's share price fell 1.3% yesterday. It's down around 75% over the past 5 years. The good news, I suppose, though, in recent months, it certainly has stabilised somewhat.
That's true. And Sean, in recent years, we know the AMP shareholders have had a pretty tough time. Do you think this is some reward for those sticking around?
Yes, I think as they sell assets, which is what they're doing, and simplifying the business, they're giving that money back to shareholders, which I think is a good idea.
Yeah. All right. Building Products Group James Hardie has been without a chief executive since January, but expects to announce one in the next month.
It's about time, Adam.
Yes, it is.
Former boss Jack Truong was forced to step down following an investigation into claims of bullying. The company has also reshuffled its boardroom, and Lloyd will become the new chairwoman. That news helped its share price jump nearly 3% yesterday, though it is still off more than 35% since Mr. Truong left.
South Korean steelmaker POSCO will partner with Gina Rinehart to pump more gas into the domestic market with a $1 billion coal seam expansion.
Yes, and not everyone's happy, including the Greens. Work is set to begin in weeks at the jointly owned Queensland Senex venture. Senex says the investment, which still needs approval by Environment Minister Tanya Plibersek, will create more than 200 construction jobs and help close a looming shortfall in domestic gas supplies.
And Sean, Santos has purchased a gas pipeline company that would connect its Narrabri gas project to the East Coast market.
Santos says that should help ease the domestic fuel shortage as well. The approved underground pipeline route, which is owned by Hunter Gas Pipeline and still needs buy-in from landholders and local councils, would create a second north-south link by connecting Queensland Wallumbilla hub to Newcastle and Sydney markets. All this move in that energy area is all about the companies being proactive and solving the gas crisis rather than waiting for the government to step in and force them to do something.
Now, Sean, you remember that phrase, never let a crisis go to waste?
Yes.
It feels like this gas crisis is not being let go to waste.
Yeah, I think that's right. That's a very good point.
Moving on to overseas news, Disney has outlined a 50% jump in profit with its Disney Plus streaming service, adding 14.4 million subscribers in just the June quarter.
They're massive, those numbers, 14.4 million subscribers. Now, Disney's portfolio of streaming services, so Disney Plus, it also includes Hulu, ESPN Plus is in it as well. It is now almost 221 million subscribers, which is about on par with Netflix.
Already?
Yeah, amazing. Mind you, the biggest jump in earnings from Disney came from the theme parks. They had a cracking 3 months, and they pushed total profit across the group to $3.6 billion. The big theme parks like Disney World in Florida and Disneyland in California are broadly considered a barometer of consumer confidence because people only go there when they're feeling good and they've got some money. So strong earnings from the theme parks suggest happy consumers. I like that idea, Disneyland, happy consumers, all that stuff.
Well, Disneyland, wasn't it known as the happiest place on earth?
I think so.
So maybe that's the bellwether indicator we're looking for now.
Perhaps.
And Kim Jong-un's sister has revealed that the North Korean leader suffered from a high fever during a recent COVID outbreak.
I don't know why I included this story, Adam. I just find anything out of North Korea vaguely entertaining. Look, Kim Jong-un's sister has vowed to eradicate's the word she used, South Korean authorities if they continued to allow propaganda leaflets, which she claims spread the virus. She blamed South Korean puppets for sending dirty objects across the border in leaflets carried by balloons. I don't think I can say any more on that. Just leave it there.
Me too, Sean. Up next is the Fear and Greed daily interview with Adam Schwab from Luxury Escapes.
That's right. Adam is very candid in his views on politics, particularly in this interview, but also he talks about the destinations that are doing really well, how you avoid high ticket prices, where you shouldn't go if you want to avoid that. Just a great chat with Adam. He's always interesting. And, it's voyeurism at its finest, isn't it? Thinking about where to go on a Friday.
Yeah, Luxury Escapes, a little bit of politics and some travel tips. What more could you want from an interview?
Yes, exactly.
That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Adam.
It's Friday, the 12th of August, 2022. Make sure you're following the podcast. Join us on LinkedIn, Twitter and Facebook. I'm Adam Lang, and that was Fear and Greed. Have a great day.